Good morning, good morning, good morning, good morning, everybody. Super excited to be here with you. It is Sunday morning, and we all know what that means. We know that it is time to talk real estate investment and all the awesomeness that I've been through this last week. Always share my stories with you guys to make sure that you guys know it's not always easy. In fact, it's often not easy, but that's why not everybody does it. So I'm the Lumberjack Landlord. I have 135 units. I now have 47 buildings, and I've been doing this for 22 years. I made it through the Great Recession, and I'm going to make it through this next recession too. But what I want to do is I want to talk a little bit about these stupid, moronic crash videos. When it's literally, let's look at these crash videos. Let's look at the people doing these crash videos. Who are they, right? What is their training? Are they real estate investors that have done this for 20 years? Have they seen multiple cycles in the market over those last 20 years? If they've been in it for 20 years, yes, they have. If they've been in it for less than a dozen years, they have never seen a down market. Yes, I agree with the people out there that say, hey, if you're a real estate investor and you've only been doing it for 12 years, you probably don't know a whole lot. I wouldn't go that far that you don't know a whole lot, but I would tell you that you don't know what to do in a down market. Why? Because you've never had one. And those crash videos that constantly talk about, I mean, I kid you not, guys, one of the most often received emails by me, because I look at all my own emails, albeit I'm not that good at through emails. Honestly, the fastest way that I see people post is Instagram and comments on the videos. Those are the things that I see the most often, and then I try and get to everything else kind of secondary to that. But I think the most interesting thing is one of the most often posted items is, all you guys are greedy, you're going belly up, and you don't know what you're doing. This coming from a renter, this coming from a person who owns a single family house, this coming from somebody who's never, ever invested in real estate. They just don't know what they're talking about. They're completely out of their depth. I don't show up at their job and tell them what they're doing is wrong. I don't, because my belief is that if you've been doing something for a dozen years or 20 years, probably have a pretty good handle on not only how to do the job, but do it more efficiently than everybody else. And you better understand the things to look out for. So what I want to always do is bring value to you guys that are constantly watching the channel and saying, hey, we're landlords, we're small landlords, we're just starting out. We've been in it for 5 years. We've been in it for 10. You've not seen a down market. The biggest key to the down market is really understanding that you don't instantly go belly up. What ends up is you start rolling over. That's what you hear when you hear the term rolling over. What that means is it actually means that the market is rolling over and things are changing. What you start to see is you start to see more people paying late. Then you start to see more people not paying. Then you start to see that continue to escalate if the market continues to get worse. What I can tell you is specific to my market. I think you should be looking at exactly the same. You need to be looking at how long things are taking to rent. You also need to be looking at what is the realized price, and also recognize that all landlords are not created equal. If you are a great landlord, it means that you need to be a great operator. It doesn't mean you are, it means you need to be. So if you need to be a great landlord, what does that really mean? Number one, we recognize that we work with our tenants to address any issues that do come up. And as they come up, we want to work with them to address the problem. The thing you really need to realize and understand is that you do need to fix things. You do need to take care of things that are going to go sideways, that might only get worse, like a roof leak, things like that. The key to this is making sure that you have the funding, right? When I was in the very beginning of my journey and I didn't have a whole lot of money and something would go wrong on my property, I was just like, that's better indicative of what my hair would look like, is very little hair, rubbing my head, going, oh my gosh, what am I going to do? What you do is you make sure that you have good reserves. So the discipline that you need to have as a landlord is, I'm hearing too often now, everybody focused on their next deal, their next deal, their next deal. That's really, really, really important. But one of the things that great landlords and great operators understand during a correction, not a crash, And crashes will happen in some markets, but overall the entire country, this is where this is really important. People calling for crashes all over the country, that really truly doesn't make a difference to you. In large order, it just doesn't. What matters to you is your local market, and no one should be a better expert in your local market than you are. Every single day, understanding what things are trading for, what rents are going for, our delinquencies going up in your market. National delinquency tells a national story, but it's skewed. Numbers are way off in Vegas. Numbers are way off in Boise. Numbers are way off in Phoenix. Does that have anything to do with my market? What's going on in my market? So when people pipe up and say, oh, you're going to go bankrupt, oh, you don't know what you're doing, I beg to differ. I will put your knowledge of real estate and rentals and landlording in my market up against my knowledge of all those things in my market any day of the week, twice on Sunday, and I'll bring stacks of Benjamins to show you how much I know my market better than you. You guys need to be experts in your own market. And that confidence that I have of I'm going to be totally fine in this upcoming market, that confidence that I have is because I've done the work and I understand. I have dry powder. I have plenty of money sitting on the side. Yes, I'm still looking at deals. Yes, I'm still buying deals because that's just mathematics. I'm not trying to time the market. And will a better deal be 20 years from now? Guess what? All of my deals 20 years from now are going to look awesome. They will. All my deals 20 years from now are going to look awesome. I will have acquired more real estate. I will have acquired more rents. Rents go up, even if they don't go up every single year. We've had flat times where we've gone 2-3 years without really a rent raise. But when people move out and new people move in, the number has always gone up. So I would encourage you guys, there's so much that I just unpacked there, but really the core 3 tenets are this. 1, make sure that you're taking care of your tenants. Please make sure you're taking care of your tenants. And the way that you take care of your tenants is this is not a investment mode strategy. This is a preservation mode strategy. You want to make sure that you have more than enough in that pile. Let's just say things get a little bit nuts. Let's just say that happens. Let's just say that there's massive unemployment. We get to 10%. I know that everybody likes to point to that. That means 90% of people are still working. And while 10% of people are miserable and not working, 90% are still miserable and working, or you're Dion. But I think the things you guys really need to look at is be encouraged. Confidence comes from knowing the data. That's why I'll argue with these guys all day long. They want to point at this national number and point at that national number or point in Vegas. Am I an investor in Vegas? Then what do I care about what's going on with Vegas? Vegas might be crashing. I'm shopping there for a home. It's come down, but it's not crashing. It's coming down quickly, still not crashing. But I think the great thing about this is you guys need to have confidence in yourself. All of these idiot crisis videos and all of this just, I almost swore, all of this just crazy stupidity, it's just not worth your time. Invest your time in people. And invest your time in process. Invest your time in things that create value and give you a return. I'm happy when my tenants are happy. I know that they're happy because they reach out to me, say they have an issue, and I take care of it, and I let them know this is what's going to happen. Over communicate with your tenants if you need to. Hey, this is what the guy just said. He's going to be there this such and such a date. I'll text you that morning and make sure to follow up. I do all of that for my tenants times 135 units. And you know what? It doesn't take that much time. It really doesn't. On my part of it, on the front side of the business, I might spend an hour a day on my side, so 30 hours a month, but that's with 135 units. And it's just kind of coordinating things because we've got so many projects going on. So when you guys are watching these crisis videos, just keep in mind, these guys have no clue what they're talking about. They are largely not economists. They are seeing their world blow up in front of them because they're usually mortgage guys, real estate agents, analysts. Oh my word, analysts. I've worked with tons of analysts, and analysts do one really good thing. They analyze the data that they have in front of them. I make the data. So when people are looking at these spreadsheets, it's data that's 30 days old, 60 days old. It's data that was estimated, whatever, don't care. I'm evaluating each deal on its own merit. I'm making the decision on that deal on its own merit. You need to have dry powder. You need to have money set aside. All of us mom and pop landlords are not going to go blow up. People don't understand. This week, everyone's talking about falling rents, falling rents. No, sorry. In my market, I rented out 3 units this month. 3. And all of them, the cheapest one was 10% over what it was last year. I know I've been called a leech. I've been called a bloodsucker. I'll teach you something right now. It's called market. It's called the market. And the best part about it is I reached out to, just making sure I have all my ducks in a row. I reached out to all of the housing agencies that do business in my area, 3 different towns, 2 different counties, and they have over 300 open vouchers. 300 open vouchers. That means that somebody has been allotted a voucher and they have not found a place yet. 300. And that's in a population size of about 50,000. That's pretty big. That's a lot of vouchers. And so the administration currently has continued to broaden housing vouchers and Section 8 housing. They've continued to broaden that. They went from about 2 million vouchers to over 2.3 million vouchers. That will continue to grow. The issue is that they're still having issues with people that have vouchers even getting them. Just because a voucher has been created doesn't mean it's actually getting used. Most people don't know this, but you only have 90 days to find housing with that voucher. Think about that, 90 days. And if not, that voucher expires. They can extend it usually 30 days, but after that, it expires. And when it expires, guess what happens? You go all the way down to the bottom of the list. There are places in this country that literally have 8-year waiting lists. 8-year waiting lists. In my area, it's about 2.5 years. But the crazy thing about that, voucher goes unused for 120 days, you lose your voucher. So they are very motivated to try and find a place. Shockingly, some much more motivated than others. We had one woman that actually got her voucher, and literally she signed up to view the apartment within 3 days of getting the voucher. She was under lease within 2 more days of that. I'm telling you guys, this is going to be an amazing time. I'm actually going to be coming out with a video talking about bulletproofing your portfolio. I believe that's what I've done. I think all of these people making all the noise about they want my portfolio to blow up, they want us all to go broke, all the housing it's going to lose its money. It's just whatever. I don't care. I'm not going to debate the topic with you. You can say that all you want. I disagree. And factually, I know far more about the market than you do. I don't care what economist you're listening to. I don't care who you believe is better at managing my business than me, but I'm great at managing my business. And there's proof in that. There's proof in that because my business has been in business for 22 years, and every single year we have grown revenue. And we have plenty in reserves that if something goes sideways, which I believe that when evictions start happening in bigger droves, because I believe that they will start happening in bigger droves, I think you will see a lot more evictions. I think that you're going to see that things might be 60 or 90 days as opposed to a 30-day cycle. But that means I go 90 days without rent on that particular unit. Okay. Guess what? They're still going to be looking for a unit. So you guys, when they get evicted, they're still going to look for a unit. You as landlords have a responsibility to yourselves and to your business and to your other tenants that you have around that particular unit, that you're doing good work and searching for great tenants. We have 100 inquiries in the first 24 hours of any unit that we post. And that was in September. Now we're hitting winter months. Now we're hitting November, December. This is really a dead zone. We don't see a whole lot of rentals, A, come available, but B, there's really not a great pool of renters that rent those. And so in this particular situation, we'll look to Section 8 housing and say, we have a unit that's available or coming available on this time. And if we can work out the numbers in the beginning, then we'll let that unit go to them. But I want to encourage you guys, stop looking at all these stupid crash videos. And quite frankly, if you want to go sit there and get your ears tickled by the crash videos, now I'm not saying don't do other research. Absolutely, I do other research all the time. However, I'm watching my business, I'm watching it operate. I'm watching it on a daily basis, see exactly what we're seeing occur. And I can tell you, the business is as healthy as it's ever been. Rents are up, and they're not up a little, they're up a lot. And I'm not a bloodsucker because somebody's still renting that unit. If you say that that unit is ridiculously overpriced, the only thing you're telling me is that you can't afford it, not that the market can't. And the market is the one that makes the decision, because all of those units, they were gone within a week, all of them. And that included our due diligence, included the credit checks, it included all the back and forth of here's your lease and take care of this and take care and deposit. All of that stuff happened literally within 7 days of them being posted. I can't tell you enough. Be confident in your skills, be confident in the work that you're doing, but make sure that you're doing that work. If you're concerned, if you're scared, start doing more work, start doing more research, start better understanding the situation, and start creating what I call off-ramps. You know, for us, we looked at the market and said, you know what? If a great recession is coming, we need to make sure that we're better diversified. So we did that. I'm going to be talking about that in my bulletproof portfolio video coming up. 3 easy steps to a bulletproof rental portfolio. We'll be talking you guys through all that stuff. But I think my good buddy Dion will be joining me sometime soon here. I'm excited to have him on, as I always am. But let me just leave you with one last thing too, because I think that this is really important. All those blowhards who have been calling for 2.5 years for a crash. Let's be very clear. Right now, you could sell your house right now. Right now, you could look at as the buyer or seller of desperation. Right now, you could do that. Right now, you could post your house. If it was a $600,000 house, you could post it for $50,000 less than what you think it's worth. And guess what? You're probably still had 125. That's the facts. The fact is that they want to sit there and say, you can't sell your house. Oh, really? I see houses selling every single day. It's where the buyer meets the seller's requirement. So maybe it's, maybe it's off-market financing, maybe it's an off-market deal, but MLS is still closing deals every single day. Guys, my trusty chart is here and true. If you listen to all these clowns about how the crash was coming, the only thing that you've seen is your payment go up. The price of the property has just started going down. And I called for a 10 to 20% correction in median home prices across the country, because I think there are going to be hotter zones and colder zones when it comes to things actually, hitting that market and actually creating a boom in the market. But as rates continue to rise, this is 6.7. Now we're in the 7.26. That's the last number that I heard. And that was for owner occ, not talking about commercial or not talking about investment properties. You could be in the high 7s, low 8s. If you're a DSCR loan, you're in the 8s. Guess what? The only thing that's happened is your payment's gone up. But if you're doing the math based on what your rents are and seeing what your rents are versus what your payment is, just make sure it's a great yield and a great return on your capital. If you're doing that, you can still buy in a horrible market. Trust me on this. I'm not encouraging you to buy. I'm just saying do the math. Only you can decide if you want a deal that size. Are you willing to take a deal that's 6 or 8 points? Do you want 15? Do you want 20? Maybe the market supports a deal like that. Maybe it doesn't. Just don't fool yourself and do bad things. Don't buy a deal all cash. Certainly not for your first property. If you do that, it skews the numbers, because of course you're going to have return on cash, but how big of a return are you going to have on that cash? So like I said, I wanted to make sure to talk about these crisis videos because they drive me absolutely nuts. And frankly, they're done by a bunch of people that don't really know what they're talking about. They're not real estate investors. They don't have a whole portfolio and actually see what rents are doing. They don't work with banks on the daily to talk about that portfolio and see what kind of exposure the banks have. I don't just talk to the bank about my portfolio. Why would I need to talk to them once a week if I were doing that? I talk to them about, what are you guys seeing? That's the famous question that I always ask folks. What are you seeing? What's going on? What's developing? What's the news? That's what I'm always looking for. So I'm trying to encourage you guys, make sure that you understand crash videos. I get it. Most of those people are never going to do anything. The people that are watching those videos, they might buy a house eventually, but they don't understand the first thing about it. They don't understand that they're missing years of increase, that they're going to be having years of increased rent, years of depreciation on and recapture on your taxes. There's so many things that they're missing out on. It's beyond ridiculous. I'm not here to convince them. Not here to convince them. I'm here to make sure that people that are in the game doing the work, that you guys know what I'm doing and that I recognize. I believe there's a correction coming, not a crash. I believe there's a correction coming. When that correction comes, you just need to be prepared. And that might be making sure that you, again, capital preservation, making sure that you have enough money sitting around that if you go 3 or 4 months without rent on a place because you're going through an eviction process, that you're able to actually handle that and it's not something that stresses you out. That's what you really need to be focused on. Making sure in a capital preservation perspective, because the only reason I was super nervous in 07 and 08 was because I had no capital set aside. So I was truly being dictated by what my cash flow was if I was going to be okay. That was a problem. So I would strongly encourage you guys, just review your capital preservation. Make sure that you understand that the income coming in, you know what? If we might need to do a roof, or it might look like the roof needs replacing. In most cases, if the roof isn't leaking, it needs replacing in the next couple, 2-3 years. I'm telling you from a project perspective, I'm pushing that stuff off. Because if it's not actively leaking and it just doesn't look that beautiful, I'm getting quotes and prices now, engaging vendors now, seeing what their pricing is now. And then when it comes time, if a recession hits and we're in the midst of a recession in summer of 23, there will be people looking for work and that price is going to get a lot better. So hopefully that's encouraging to you guys. Want to get my good buddy Dion in here so he can come hang out with us. It's really hard to schedule time with a retiree. They're extremely busy people. Retirees are very busy people. There's the busiest guy in the world.
My schedule became so much more important when I stopped needing a schedule.
Exactly. Well, I'm sure you heard part of my rant there. So any thoughts on the rant before we jump in and start helping some folks with questions getting answered?
We got some good questions today. My thought was on the affordability. And I made a video about a month ago on the flaw in the affordability index. Mm-hmm. And they're not quoting the index so much as people are saying housing is not affordable, because they just look at wages for an area versus price or rents for an area, completely ignoring remote working, completely ignoring record wage inflation. And I don't mean from people getting that 5 to 7% per year from their boss. We're seeing over 4 million people per month for over 12 months in a row now leave their jobs and still having under 4% unemployment, which means they're leaving for other jobs, which generally means a pay raise, which we're not going to see in tax records until next year. This is really a lagging indicator. Yep. So to really back up your point, when somebody says it's too much, but someone is buying it or someone is renting it, it's just too much for that person.
Right.
And when people say it's unaffordable, where you want to live might be.
Yeah.
I have a brother who lives in Los Angeles County, like in Los Angeles County, $200,000 for a 4-bedroom house. It's just not in LA. It's not in, along the beach. It's not in one of those areas. A lot of people will say, I can't invest because my area is too expensive. Well, expand your area out a little bit.
Right. Right. No, I completely agree. Like I said, I think that people need to this is business. There is that changeover that you go from it being, I take pride in our units. I take pride in the work that we do. I take pride in the service that we provide, but I'm not offended when somebody says I'm price gouging and it's unaffordable. That's a personal thing on them. They can't afford it and they don't understand the market. And I think, Dion, I think I kind of
sorry, but
please.
For the guy with the name thank you so much for logging into every one of Mike's videos and leaving the comment saying landlords are parasites, because every time you log in to bitch him out, Mike makes a penny. So Mike thanks you, and I thank you for Mike's penny for every time you logged in to say landlords are parasites.
I mean, I appreciate the view. It just shows your limited knowledge about anything. So that's cool. But what I really wanted to do, Dion, I feel like I need to share this because I think that everyone thinks that being a landlord, might be easier than it is, or that because we have as many units as we have, that we don't catch garbage from tenants. So I'm going to take you guys through. I think you guys will enjoy this. Dion, you might not want to be a part of this or certainly associated with it, and that I understand.
I'm okay with it.
The views of this channel are purely those of my own. But one of the things that I actually done yesterday, so I'm kind of active on Facebook Marketplace. I like to buy cool things for my office. I'm decorating my office, decorating my studio, putting stuff on the walls so we don't have so much of an echo. And so I like cool stuff. And so I found something on Facebook Marketplace and I reached out to the guy and I said, hey, that's pretty cool. And then he said, I said, hey, is there a reason that you raised the price? Because he had listed it for one and then raised the price after he interacted with me. So I thought that was kind of funny. Wanted to get his look. He goes, I honestly think it's worth that. It's a nice vintage piece. I don't really want to sell it either, but I'm willing to sell it for $80. And so I said to him, so I hadn't responded back. And he goes, I'm sure you understand the value increases and inflation. You raised our rent from $650 to $1,100. Again, just sharing the honest truth with you guys. So I said, what's your address? I said, it's possible, pretty sure, but it's not, it's possible. And then he says, I can meet you in this location. We can do it. And I said, whoa. I want to know that I raised your rent from $650 to $1,100 because I've got 135 units. Wasn't sure which one it was. He said, not sure. Did you buy this address a couple years ago? I bought this building almost 5 years ago, four, but coming up on 5. I said, I did about 4 years ago. He goes, wow, time flies. And so he made the comment that his rent going from $650 to $1,100 was absurd. Here's what I would tell you. In this market, and this is what we try and do for a lot of our tenants, I said, I believe that you're in this one bedroom. With heat included, I can rent that for $1,500 all day long. We do our best to keep our rents below market. And in fact, Section 8 housing is $13.55 for your unit, and you have oil included at $6 a gallon. He just gave a thumbs up. I think he might have recognized that he might have stepped in it just a little bit. Now, at the end of the day, I don't want to be punitive and I'm like, now I'm going to raise this guy's rent and really show him who's boss. That's not the point of this story. The point of this story is really very simple. He was offended that I raised his rent from $650 to $1,100. That $650 rent was what he started paying in 2001. It's our job as landlords to make sure that we're running our business as best as we possibly can. This goes to that affordability statement. $1,100 for that unit is actually still way under market, but I had given the guy a raise a couple of years ago. He's coming up for a raise sometime next year. But we look at this and again, if he believes it's unaffordable, what does that really mean? It really means that he can't afford it because Section 8 can pay $250 a month more than he can, and the market will pay $400 a month more than he's willing to. So I don't begrudge him. I don't say to him, well, that's too bad. I just look at him and say, hey, we kept your rent as low as we could. We've stayed behind the curve. But at the end of the day, you saying it's unaffordable is your opinion and it's unaffordable to you. So when you recognize that we're not sitting here trying to put people out of their houses, but we do have to charge near market rents because guess what? One of the things for revaluation that the banks will look at as they're looking at loans, they will look at the fact that you're driving enough income to actually cover the loan with enough reserves. So you don't want to put yourself in a position where you're having to also raise rents in a really bad economy, even though rents often go up in a bad economy. Dion, anything to add to that?
So sometimes we're not in the convincing business, but we are in the education business. We're trying to share what we did as a knowledge base.
Yeah.
So we're educating our tenants, other people who are watching our content to invest, and sometimes people who just hate landlords.
Yes.
Our expenses and what somebody was paying for rent last year has almost nothing to do with what rents are.
Agreed.
Area average rents set rents. When rents skyrocket, if you fall behind, your property taxes, your insurance are going to be based on valuations of property, based on what people are getting for rents. Like a lot of things can just sink you, let alone your lendability in the future. It's sometimes hard to educate people exactly how you said it. Yes, rents went up. We're still below average.
Yes.
Right. You could go to area average, but we don't have to.
No.
And then some people will say, well, I got this in 2000 and I've been paying $650 for 20 years and you raised my rent. Well, you got a great deal for 20 years. Like, acknowledge that.
Yeah, I think that's exactly it. And often these are the types of properties that I'm buying. I'm buying properties that landlords literally are selling. And this is my least favorite thing to hear from a landlord. I just can't afford to keep it anymore. That's why this person had to give up on their retirement plan, because they just couldn't afford it anymore. That's wrong. That's going to take units out of the market. That's a bad thing for the market. So anyway, I'm not asking for anybody to cry for landlords. I'm just making sure you understand what you're talking about before you start talking about it. So let's jump into some questions real quick here. Dividend Dave, hello. How's the fam? Fam is great. Thanks for asking. Tom Kind, hi all. Hi Matt, glad to be here. Glad to have you here. I like the intro. Glad you like it. Morning, Matt. My side hustle, REI Stoners, overtime, and I just put in 5 hours off, and now it's time to learn from Lumberjack. Hopefully we're dropping some knowledge for you. Keith Hager, good morning, investors. Will we need to go to local small banks and credit unions to find financing? So Dion, thoughts on that? Because I know that was a big bandied about debate with some guy that was on Zuber's live stream yesterday, where I was just trying to correct him and say, your big international banks have nothing to do with local lending.
Not even the international ones, but the large banks with credit unions, local banks. Even when lending was good, that was a thing. There were people who said, there's no way I can get a 5% down payment on a duplex because my bank said no. 3 banks said no. And then your neighbor buys it with the 5% down conventional through the local credit union or something. Lenders are not all made the same. And what lenders will do today is totally different from what that same lender will do next week.
Sure. Yeah, I think to your point, Keith, what you really need to be doing is you need to always have relationships. The reason why I'm very confident about where I am with my business and as an operator is because I don't have a relationship with even just one bank. I have a relationship with 4 of the 6 local banks in my area. I know the bankers. I can give them a quick call and say, this is what I'm looking at. What programs do you have? This is what I'd be looking to buy or refinance or whatever with. What are my options here? And so I have those calls probably about once a month. That way they know that they can kind of expect a call from me, number 1. Number 2 is they know that I'm serious, that I can do business. And number 3 is I'm keeping apprised of exactly what they're offering. I know one bank is only doing 7-year ARMs on investment properties. They have a 5, but the rates kind of jump. But then they have a 7. They're like, this is really our sweet spot. This is what we're doing. Why? Because their actuaries, their analysts have believed that in the next 7 years, that product will likely be less expensive. Thus, it makes it a valuable asset now where they can basically get a bigger rate. And then they believe in 7 years that rates are going to be far lower than that. And that they believe at that point that they will have gotten excellent optimization out of those 7 years, because you can't really refi out of that thing without penalty in 7 years. Dion, thoughts?
Well, and the really important thing when it comes to lenders is understanding that, and this is to steal from David Green from Bigger Pockets, because I think it's the first time I heard it was from him several years ago. Anytime you get a no, follow it with, but why?
Right.
It could be, no, I'm sorry, we don't have a product that covers that. And you say, but why? And it might be, well, your leases don't have 3 months remaining. You don't have a large enough reserve. Whatever the criteria is. So that's the first thing. So always try to find out the reason if they can find it. They might not always have it, but always ask, but why? Mm-hmm. And second, lenders don't know what they can do until you present what a competitor will do in writing, mm-hmm. that they could take to their boss and say, this is what we need to beat to keep the business. That's exactly because right. In the next couple of years, lending is going to get tighter. Lending fears are going to go through the roof. I think lines of credit could disappear. Home equity line of credit could disappear. Credit scores will go up as for requirements. Debt to income will come down for requirements. So lenders are going to get hungry.
Yep. Do
the work for them. Find a lender that you might not want to work with who has a better deal than what your lender's offering. Give it to them in writing and watch how much more flexible they are when they're trying to beat a competitor to keep business.
That's right. And quite frankly, to steal something from Dion, that also works with Section 8 housing and housing authorities. It also works. Listen, they're not going to believe you. They're not going to take your word for it. So present them with the data that they need to make an educated decision. And if they still make the decision that's not in your favor, at least you educated them and you let them know. And don't think that they won't ever call you back. That's not the position that they're in. These housing authorities can't afford to offend landlords. Without us, they don't have the ability to place tenants. And some of them, in Dion's case, forget that. So anyway, let's jump in. Matt Bittner, hey, good morning. What are you paying for heating oil? $5. So I locked in at $4.69 a gallon. Thank God I did. It's trading right now at $5.79 a gallon. $5.79 a gallon. It's a nightmare. And watch for an upcoming Lumberjack Landlord product review, because I have this probably my most important review of any product ever, because this one product that costs less than $50 will probably save you tens of thousands of dollars. So I will be sharing that with you guys in the next week. Dion saying meowdy. He's here, he's there, he's everywhere. Financial firefighter, good morning from Hawaii. Good morning. Jay Aguilar, what's up, bro? What's up, Jay? Amanda St. J, good morning. Good morning to you, Amanda. Excited to have you here. Sean and Wendy, God is amazing. Thanks, Matt, for the virtual breakfast on us. I am stuffed already. Look at all that food. That is impressive. Kip, SOS Investment Properties. What is the best way to figure out rent value in an area? Dion, take them through your strategy and then I'll take them through mine.
What I like to do is, and I do this kind of often, especially if I'm going to use the binder strategy or if I'm going to be making offers on properties so I can calculate my yield correctly. Rentsometer worked from 2015 to 2020 when rents were going up slowly, and then they came out with a more advanced one where you can take it from 12 months historical data down to 3 months and be a little more accurate. But in my area, they're 30% off. They're low, and most times, once in a while, they'll be closer. So what I do is I actually go like I'm trying to rent a place. Craigslist, Facebook Marketplace, apartments.com, Zillow. Look for places that have the same number of bedrooms. Don't compare amenities, because while some tenants might really want the garage, some might prefer the carport, and you don't know which one's going to rent for more demand. But they do look at bedroom count. They never look at square footage. I've never had a tenant even know what the square footage of rental was. That's an owner's thought, not a renter's thought. And then track it for a couple of weeks. You can't take a screenshot and go, okay, that's what rents are. What if it sits for 2 weeks and doesn't rent? What if it adjusts up or down? What if it disappears and comes back $300 higher? Like that's what you're going. That's where you're going to get the data. Is people will say it's unaffordable. People will say it's cheap. But what does it actually rent for? That will tell you what the rents are. And it does take a couple of weeks to get a good feel for it. It takes a couple of months to get a good feel for what prices should be in an area. But to figure out area average rents, it's usually about 2 weeks.
Yep, I agree with that entirely. I came up with a concept called a rent box, video right on the channel. Take a look at that rent box. It's literally only about 8 fields that you populate on any given rent that you find. Helps you track it for that 2-3 weeks before you're coming to market. Then you'll know exactly what rents are. And there's nothing wrong. You can, if it's lower inventory, push the number up a little bit. You might surprise yourself, but don't be like a seller and think, well, then that's now the number. Nope, that's a number that you're trying, seeing if you're going to get a good tenant at that number. If you do, it's a win. If you don't, just be ready to reduce your number after a week or two and recognize that that clearly isn't the number. And for whatever reason, that number is not going to work right now. Let's see. SOS. What's the best? Nope, we already covered that. All-nighter hire. Local means APN. Yes, sir. Matt Bittner, can you get those tenants to pay for the heating oil or pass on the costs? Yes and yes. We have propane that actually in some cases where it requires a credit check. We know that some people, they really want a high credit score on propane, which is kind of crazy. But the vendor that we love that has the best service, they require like a 700 credit score. We don't even require that to move in. So what we usually do is we leave the propane in our names and we actually bill back the tenant. But that does have risks. However, in most cases, we either have them on with the oil company, and then they're in charge of deliveries. The only thing that we require is that they sign up that says automatic delivery, where they get a delivery once a month regardless. That way we know they're not going to run out. Robert Farinelli, thanks for the super chat. I will answer your question, except before that, all-nighter hider, stimulate that like button. See, this is the first time I've been pro stimulus. First time ever. So I appreciate it, Hyder. Robert Fairley, your question. Can you go through soundproofing and upstairs, downstairs? I'm more concerned with impact noise from old wood floors. heard resilient channels give the best results. I use the resilient channels and I didn't love them very much, just being honest with you. You can use resilient channels. There's two things that I do. I do safe and sound if the ceiling is exposed. I do safe and sound in between the joists, the floor joists. It's a product that doesn't have an insular quality, but it does have a sound deadening quality because it does fit up into the cavity. It's a pressure fit. So you basically push it into the cavity. When you get that, but don't compress it. You actually still want it to be as fluffy as possible, but it does come in what's called a bat, which is a section. You can just push it right up in between the joists. That will actually deaden your noise pretty well. I think the other thing that you also want to look at too is lumber liquidators. If you're doing a different floor upstairs, you can also do, they have like a sound deadening sound mat that you can put down. That product is actually really good. If it's the original wood floors upstairs and that's what you have originally, really the only thing that you can do to really get a good result is the safe and sound. I've used the resilient channel, quite frankly, didn't really like it that much. I thought for what it cost, I didn't really feel like I got the value out of that. Dan, do you have anything else to add to that?
So my solution for soundproofing, and my units, I prefer side-by-side units, right? But I have townhome style fourplex. So literally our units are above and below.
Sure.
Thicker LVP and not plank. Sure. So that's the thing. This is the thing that tripped me up. On a downstairs floor, I'll get the plank to where it looks like wood and do LVP in that format, but they tend to creak and make noise because they're longer and they'll bow in the middle. So I go with the tile. So it's huge tile though, like 2 feet by 2.5 feet, squares of tile and thicker, 30 mil for second floor. And then if you're really concerned, because there's a follow-up question down below on you said in the video before that you didn't care about soundproofing the bedroom. Two things. One, if people are doing something in the bedroom you don't want heard, put music on. Second, and I'm going to try to be as vague as possible because I don't think they would watch this far into one of your videos, but I had a tenant. I went to his house because I heard in one of the rooms there was a little drywall piece that was going to be repaired, and I was just going to look at it to make sure my handyman would do it. And I was in the area, so I swing by and I look in his office. And his office, he got this matting material from a local guitar store on soundproofing a studio for recording. And I said, well, that's interesting. He says, oh yeah, this is my office. I work in here all day, but oh my God, the neighbors, the things they do, and I can hear through the wall, and it's so loud and so detailed, which was a female family member of mine renting the other unit. So I've never brought that up to them, but he soundproofed the wall. So, I mean, there's a lot of options you can go with that might not look as aesthetic as putting in a bat or thicker LVP, but put music on.
Yes, I agree with that. The other thing that you can do too, it's a more expensive option, but you can also add something called quiet rock to your ceiling. What you'll find with quiet rock is it's a 1-inch thick piece of sheetrock, but it actually has a membrane that goes through the middle. It's very expensive, but it's actually like stacking 8 or 9 pieces of 1/2-inch sheetrock on top of each other. It gives you that much sound deadening. So it's a good product. I usually put that on the party walls, and that product has been fantastic for us. And then now fire code, when you have a upstairs unit and a downstairs unit, it will help with insular quality. It will also help with fireproof quality. Now they require 2 layers of 5/8. And so that is also helping reduction in noise, but we're also going above and beyond. And because we have exposed studs and joists, we're actually doing the safe and sound in the walls. Again, no insular quality to that. However, it's pest retardant, fire retardant. It's actually a really cool product, but it is very good from a sound deafening or deadening perspective. Sam Farho, good morning, Matt. Good morning, Sam. Robert Fairley, when I do this, I am also concerned about ceilings coming down too low. Sure. Yep. Your opinion, what is too low? 7.6. I wouldn't go shorter than 7.6. You might be able to get away with 7.2 or 7.4. Your opinion, what is too low? And did you say in your live stream 2 ago that you're not very concerned with soundproofing a bathroom? Yeah, a bathroom. I'm not really overly concerned about soundproofing. It really depends on where the bathroom is. I mean, is it I don't have, like Dion talks about, I don't have a lot of over-under units. All my stuff is side by side. So usually because you bring up plumbing stacks in the same area, what I do in that is that's where I'm using safe and sound in between those units, because that's usually the units are, if they're side by side, they're usually mirror images of each other. That's what I'm usually doing. All-nighter hider. San Diego was about 6-year waiting list for Section 8 a few years ago. Yep. That's the rumor I heard from a neighbor. I would just double check that, because you always, at least if you're a landlord, you always want to know what the current waiting list is. Because what do I do? Do you know how many Section 8 recipients of the voucher? Do you know how many of them know that they lose their voucher in 90 to 120 days if they don't use it? Number one. Number two is they also don't know that they go to the bottom of the lists. And number three is when they signed up, maybe a couple of years ago, it was a couple of years. It might be 6 or 7 now. The more information that you have that you can provide tenants to make an educated decision, the better position you're going to be in. Dion?
One of the reasons my Section 8 tenants are the best tenants to deal with and have never had noise complaints or cleanliness issues is because they know that if they were to get evicted and lose their voucher, in Washington, it was a 5-year wait 2 years ago. It's probably only worse now.
Yeah, it's a true story. Sam Farho, the rent falling is market dependent and it might be caused by owners not able to sell, so they rent. Also, all the new built that are not selling, that can be rentals. What are your thoughts? So yes, technically that's true. However, Toll Brothers is not going to start renting their homes. They're going to bundle them up in a package, sell them to Wall Street, and they will likely then rent them out. The issue is cost basis. I have a building that was built 3 years ago in my downtown area. 1 bedrooms are $2,800. It's a brand new, beautiful building. $2,800 is their rent. Their cost basis, let's get crazy. Let's say it's $2,000. When I bought 1-bedroom units in my market, they were renting for $800. I have plenty of ways to go. I can rent it $1,400, $1,500, $1,600. And I am super happy based on my return on capital. And they would lose money every single month if they got down to $1,600. And at a $400 or $500 premium, guess what happens in a recession? People forego that premium. Dion, thoughts?
A lot of people are going to be quoting rents going down, and you really have to watch the data. We had a 30 to 40% rent increase for the last 2 years. So next year, if we see a 10 to 20%, they're going to say rent increases are down 50%. Literally, that'll be the news headline for a 10 to 20% rent increase.
Yes.
I'm not seeing them down anywhere around me. Tons of demand. I had 2 tenant turnovers this year, which is half the turnovers I've ever had. And it was in the dozens of applicants within hours. There's just nothing available.
That's
so,
right.
And then some people have the thought, and this is a logical thought, there are apartments being built. Not a lot, but some. And when there are more apartments, you figure there's more supply. So demand would come down. Those are brand new apartments that cost millions to build.
That's right.
That's going to drive rents up even more.
That's right. That's right. And again, people need to understand the business side of it. There is a cost basis. They look at it and say, this is our break-even number. This is our profit margin that we need. And then might we accept a little bit less to make our shareholders happy, to make our investors happy? They might, but they can't go below their cost basis. That's why that's really important. And for new buildings, their cost basis, I promise you, is anywhere from 200 to 300% greater than my unit cost basis. And that's where time in the market beats time in the market every single time. Amanda St. J, interested about your opinion on a single family that has been converted to 2 units. Okay, duplex. Yep. However, electric still on 1 meter. So you have a couple of options there, depending on your area. So people basically splitting meters and adding another what's called service. In my area, you can do that for probably $2,000 or $3,000 in my area. And so that's one of the options. The other option is you can meter it as well. They make technology that allows you to meter to other stuff. The other option is that you take the rental and you basically say, here's what electric is every single month or whatever it is, and then just split it evenly between the 2 places if they're mirror images of each other or same bedroom count. So those are 3 options I came up with. Dion, thoughts on any of those? I think you do that on one, don't you?
So on all my long-term tenants, I would add the separate meter. I would meter that out. If you're buying a place and you have the goal of doing short-term or mid-term rentals, I wouldn't be as concerned. It's going to be in your name anyway. I would steal a page from Beth Traverso, who has a vacation rental, where the property management company knows the temperature that the air conditioning and heater is set at, so that you can at least get, notification if there's overuse happening.
Yeah.
So it would depend on the use of the property. And then I would get a couple of quotes locally, at least softball quotes, figuring out what is the permitting. Like here in Washington, they added a new permit. If you're going to do anything, but if you're going to replace an electric panel, there's a new permit that just came out last year that adds about $500 to the process of putting in, just replacing an existing one. So find out locally what it's going to cost and just factor that into your cost to acquire. If you can add it for $2,000 to $5,000 to put another meter in, would your yield still be good enough if you had to do that?
Yep, absolutely. Let's see. Did you hear that New Hampshire is running out of rental assistance December 28th? Yep. On Friday. Yeah, that's Friday, December 28th. Yep. What's your plan? I have a tenant who will run out December 1st. She can't apply more. How should I go about evicting? Well, you can't do an anticipatory eviction, so you can't do that. What you have to do is make sure that you have open and honest communication and conversation with the tenant. Say, hey, they're not going to be able to cover your rent as of December 1st. So you're going to be expected to make your rent payment. Let me know if that's going to be an issue. That's what I would do. One of the things you can do is if they respond back with, I'm not going to pay the rent, so assistants need to come back, then you can actually move on that. But you can't do it unless they say those exact words, which are, I'm not going to pay you rent. So we always give our people a 90-day, a 60-day, and a 30-day heads up. People that their assistance is running out, even we have, I think, some that are going to run out for November. And so they're going to get a shorter notice, but it is what it is. We weren't depending on that rental assistance program to pay their rent. They were depending on that rental assistance program to pay the rent. And so they've been on rental assistance for probably 6 months, 9 months, 12 months. We're going to make sure that they know, hey, you're not going to be able to reapply. That's going to be an issue for you. And we're going to reach out to everybody and say, let us know what the plan is. And then making sure that they understand if that's, if we aren't paid as of X date for rent, then we'll be posting papers. That's what I warned about in the rental apocalypse video that I put out probably 3 weeks ago. I've been warning everybody about that for a long time. We have probably 10 units that are that right now. And a number of them we just recertified. So thankfully we got it in before the deadline, but yeah, it's going to be a concern. At the end of the day though, it's still their responsibility. It's still their rent. They got assistance for a period of time. If they don't have the money, then it is what it is, but there's no way you can pre-evict. There's no process for that. Dion, thoughts on that?
So on my channel, I have a video called Apocalypse Proof Investing. And one of the strategies I use to be ready for something like a pandemic, stock market crash, or prolonged government shutdown is not letting more than 1/3 of my units be in any one sector, Section 8, military, working, or retired, right? So a third can be impacted by this. So try not to be 100% Section 8 because it's really hands off and it's easier to find tenants and it's guaranteed money because it can go away. So it should only be impacting hopefully 1/3 or less of your units. And second, and this is to steal from Matt, if they go to the point where they're not paying, you are doing the tenants a favor when you serve them eviction papers, because there are alternate sources of rental assistance that you're not eligible for until you are delinquent or until you are facing an eviction. Right. So while the housing authority might not be running out of Section 8 money, they're running out of emergency housing funds that came out through the CARES Act. They might qualify for something else, but delaying a few months and not serving to be nice is actually going to make it harder for them to qualify for those programs.
Yep, absolutely. That's true. Amanda St. John, or St. J, excuse me. How difficult, costly to convert 2 meters? I answered your question in the future because I thought that might be your follow-up. Usually it's probably to get over to a new panel, you're probably looking at $2-3 grand. But the best part about that is that's a really easy conversation to have with electricians. Depends also on your building code. If you're 2014 code, 2017 code, 2019 code, it depends on what level of code you're at. That will also impact the cost that you're going to have associated with breakers. AFCI, GFCI breakers. AFCI breakers run between $40 and $50 a piece, whereas in the 2014 code, AFCI breakers, I believe, or it's either 2014 or 2012, AFCI breakers were not required, and thus you could do a normal 20 amp breaker that costs about $3 versus an AFCI breaker, which costs about $45. But that's okay. Take heart. All the people that vote on the electrical code are executives in the biggest electrical producing product companies in the world. So I'm sure they're had nothing in it for them. Yeah. So Shamir Bless, where do I find your bulletproof portfolio videos? Not yet. You find them in the future. They are finishing being recorded. Dion has his apocalyptic video though, which is actually very good. And I just kind of add to some of that stuff, some of the things that we've done. Laura Samaniego, good morning, everyone. Matt, thanks so much for your advice about the eviction. I so much appreciated it. So it wasn't advice, it's just what I did myself. I don't recommend that people necessarily run their business the way I run my business, but I certainly will tell you the way I run my business, and then you see how it feels for you. Dion Talk Financial Freedom. It's amazing. He's omnipotent. Let's see. Housing and rent is affordable. Record wage inflation, remote working changed the game. So true. Hager, investment finance just accepted 7.75. Yep. So there still are some sub 8s out there, even though the guy on Saturday on the live stream said nothing's below 8.35. I found 10 lenders with text messages that were like, yeah, sure, totally, we can do that. All-nighter. Agreed, Dion. As Jason Hartman always says, compared to what? Yep, the dollar is not the only measuring stick. That's exactly right. Mauritia Ninehauser, good morning. Good morning, Mauritia. It's good to have you back. All-nighter hider. Hartman prices houses in Rice, OJ, Lambos, etc. He does. It's actually really funny. Dion, thoughts on that? Have you watched Hartman much before?
No, no. I need to. I need to expand it.
So Hartman's cool.
Okay. Cool.
Hartman's, so what he means by price, so the way Hartman does it is he prices to other commodities. That way he's like, basically the idea is if there's a commodity that's an outlier, it's the commodity, not the market, right? And everything generally stays about the same price. And so if you're seeing one thing, that's where he identifies bubbles, is from a commoditized perspective. It's smart. And of course, Hyder brings us that idea. Robert Farinelli, hearing Dion talk about affordability index, our new one, 69. Ouch. Yeah. So 69, a 69 in New Hampshire means that you have to make 30% more or 40% more, means because 100 is that the median income can buy the median home. When you're at a 70, that means that you need to make 40% more than what you make to afford the median home in our state. Thank you very much, Massachusetts. It's all those Massachusetts and New Yorkers that moved up to New Hampshire.
It's almost like remote working let them do that, because they might only have to go into the office once or twice a week. And that's not a bad commute if you only do it, rarely.
Now that you say that, Dion, that makes a whole lot of sense. I wonder where we've heard that before. All-nighter hider, houses in Rice and Lambos are cheap. Or lambs and cheap. Yep. Compared to OJ, it's expensive, historically speaking. See, that's exactly right. John, Texas, good morning. Good morning, sir. Monica Galdamez. Monica, welcome to the channel. Good morning, Matt, Dion. What do I do if I already have deals that are not the best? They have low yield, 5 properties. Yield is 3 to 4%. I was not educated at all when I got these properties, and now I'm learning. Dion, thoughts?
I commented below that saying that you learned a lot buying deals that don't sound like they're alligators. They're not losing money. Good job. So many people, especially when they really educate themselves a lot before jumping in, get stuck in home run theory. Like, it's got to be a 10% yield. It's got to be a long lasting tenant. I have to do no work. It has to be super simple. They have to negotiate everything I want at closing table. I want to walk away with a check. Like, no. My first year, when I moved into the apartment and rented out the house, it was so bad I wanted to give the house away. Luckily, I was underwater and couldn't. I was losing money, but I learned so much in that year that you've learned in these deals that don't sound that bad. 3 to 4% yield. It's good. It would take too long to pull up the picture, but I have a picture I'm going to be using in one of my videos coming up soon. I have a little bit of money left in a retirement account before I left the company, because I emptied it out in 2020, but I was still contributing for the match. This year, it's only a 24% loss. I'd rather get 3 to 4% on my money in a property and feel like it wasn't a good enough deal than lose 24% in a retirement account that is gate locked behind a 10% loss and taxes if I take the money out before I'm 59 and a half. So good job, Monica.
I agree. So then I saw the next question. So Santi, good to have you back, Santi. There is, give me just 1 second here.
Yeah, so there's two things to think about this, Santi. Where do millionaires keep their money if banks are FDIC or warranty of 250,000? One, different banks, and two, what Matt's about to tell us that he found out and shared in a video.
Yes, that's true. So there is a video about this. It's called DIF, and that stands for Deposit Insurance Fund. Just like anything else, like you have the Aflacs of the world, which is you have your insurance, but then you have basically Aflac picks up the gap and they give you more on top of that. So they're not your core insurance, but they're basically like a reinsurer or an additional insurer that allows you to make sure that you not only take care of your injuries, but that you also take care of the work and things like that while you're out of work. Quack, quack. Anyway, you're welcome, Aflac, for the free commercial. What DIF is many, many banks, and you should be checking if your bank has DIF. DIF, Deposit Insurance Fund, is for anything that FDIC doesn't cover. It's basically anything over $250,000, and you pay nothing for it. It's just a matter of whether or not your bank actually pays for DIF insurance. As you would imagine, the Lumberjacks' major bank, DIF insured. And that was certainly a contributing factor because just in case something goes sideways, I want to make sure it happens. Now, that's also not to say that I don't have money outside of that bank, because obviously I do. However, the thing to also understand is if there was this massive bank run, FDIC limits, you might be bumping into those. If some, even pretty decent sized regional banks fail, you might be running into some of those limits. So even putting it in another place doesn't make as much sense as you would think. What makes the most sense is DIF is funded by banks, and that money goes into the fund to cover that cost of that. So it's a completely different fund. It's privatized. It's a completely different fund than FDIC. That's where I like the value of DIF. Dion?
So the question is, where do millionaires keep their money? Not in the bank and not in cash. There are times where for the last year, I've been saving for my next purchase. And so the money gets above 250,000. So I want it in a low interest savings account in the bank, losing money to inflation, irritating me, making me want to move the money from the bank into a property. Matt, over the last year, refinanced, pulled out some money from his properties to be ready to take advantage of the deals that are coming up. So he has a lot of money to handle. But on an average year, my goal right now is to not usually have more than my reserves in the bank, because that means it's not in a property. It's not producing cash flow. It's not getting appreciation on multiples of what I invested. It's not attached to mortgages that are providing asset protection to my portfolio. It's not getting principal pay down from the tenants every month. Like it's losing all the things sitting in the bank. I will save in the bank until I find the deal. But yes, either more than one bank. Was DIF was the insurance you look for?
Yep, DIF. Yep, Deposit Insurance Fund.
Or the next property. That's where the money should be.
Yes. Yep, agreed. Agreed. Art Family, are you still paying for oil in some units? I am, but not very many. They're the stuff that we're contractually under with Section 8. But one of the things that people need to realize is we're better off, not only as landlords, but also as the tenants. The likelihood that a landlord that really understands what they're doing will want to renew a lease that has oil included anytime in the near future is slim to none. That might mean that the tenant is going to have to find another place to live. The better option is if they are already on assistance, or they don't have assistance, but they do have low income and you're trying to do affordable housing, they do have the fuel funds in most states. Do the work for them, find the document for them, hand the document to them, or email it to them. Help them. Often the resources are available. They just don't know how to go about it. And if you're the landlord, it's in your best interest to help your tenant out. And so in some units where we do have it, the reason we did in the units that we could move it back to the tenants was because yes, the cost, and we've already seen, we got a report where oil consumption was down 40%. It kind of pissed me off a little bit. Oil consumption's down 40% from the same point that it was last year. And why is that? It's because those units we no longer pay for. Tenants are paying for those. One of the tenants actually sent me something saying, I'm feeling mighty Amish right now. I was like, I wish you felt Amish when I was paying for it, but that just wasn't the case. So I am still paying for it in some units, but not most. I think there's probably about 15 units or so that I think we're paying, 10 to 15 that we're paying for it. Travis Brennan, Sunday, anything I should do on a pre-1978 property besides giving the lead paint pamphlet and having a disclosure sign? I don't know of anything, but Dion, on anything on your side, you own some stuff before 1970 that was built before.
So if it's pre-78, I would look at when things were updated. Make sure you're inspecting for knob and tube wiring. What is it? Cast iron pipes. I mean, it can be all kinds of things.
Sure.
I don't care how old the structure is. It's not like at 110 years, all of a sudden the foundation is going to fall apart, but have it inspected. When were things updated? So yes, you do consider asbestos, lead paint, those kind of things. Make sure the disclosure's in there. Update things. When were the windows done?
Yeah.
Are they single pane? Are they, are they up to code for rentals? Basically I would look at all the things I would look at when I was purchasing the property to make sure that it would be something I would either want to upgrade or have not pursued in the first place.
Yeah, so I don't know in my state, in New Hampshire, of anything other than the lead disclosure or the family safe lead pamphlet that's 19 pages. My lease from, I don't know, 10 years ago went from 3 pages to now it's 8 plus the lead pamphlet, which is 19, plus the disclosure, which is 4. So yeah, I'm over 30 pages right now for when I send a DocuSign that they have to click and sign. Go ahead, Dion.
You have a couple super chats to get to.
Yes, I do. I saw that. Amafid, more old school project walkthrough videos, please. Amafid, I believe, I hear you. I believe that we're doing something this week. So we got the old film crew back together. And he has been given the instruction that when I'm pointing something out to zoom in on what I'm pointing out. Because I think that was the big knock on the first set of recorded videos in the field. But at the end of the day, that's the best film crew I can afford. And they're actually really good. They just needed a little bit of direction because they'd never done any lumberjack landlord walkthroughs before. And then let's see, there was another one. Is that Millennial Mike? Oh my goodness. Millennial Mike, legends doing goat things. I'd make a goat sound, but my goat sounds horrible. Dion?
I like that in my videos, somebody called me La Cabrita, the goat in Spanish. And I was like, oh, cool. I'm a little girl goat. Because that's what that really translates as.
That's awesome. That's awesome. And guys, I just realized it's 12:37. I have a hard stop at 12:50 because I have a guest at 1 o'clock that I have to make sure I'm prepped for. Chris Miller, good morning to both of you. Good morning. Matthew Paris, good morning. A lot of investors' lives quickly becoming country songs with this lending environment we find ourselves in. It's true. Continue to do the work. You never know when that deal is going to pop, and always leave it in a positive light with the selling broker. Hey, we are interested just with where rates are right now. It's not something we can do. If they would consider seller-based financing or something like that, please keep us in the loop. Let us know. We'd love to try and put something together. That doesn't mean that you love the property, you're in love with the property, you're going to overpay. It means that you'd love to try and put something together. The level of commitment that you have to trying to put something together is important. It's not like you're saying, I love your property, whatever the price is, I'll pay it. Big difference.
So I'll make this as quick as
please.
possible about investors' lives becoming country songs.
Yes.
You've been investing longer than I have, but let's take you through the timeline from me. 2011, when lenders disappeared and all of a sudden they said you can't have 10 mortgages in your name, you can have 4. Was it easy to buy a property?
No.
No. Okay. So 2013, when prices...
It was actually impossible.
2013, when prices went above 2008 and everybody was screaming it has to crash because prices are above 2008. Was it easy to buy a property?
No.
Okay.
Easier.
2018, when interest rates went above 6%, was it easy to buy a property?
Still no.
No. Okay. 2020, when you had an eviction moratorium, prices going up because interest rates went down, and a pandemic, was it easy to buy a property?
It was not.
Okay. 2022, interest rates are high and prices are high. It doesn't feel easy to buy a property. In 2024, it's not going to feel easy to buy a property.
That's right.
But believe me, in 2022, being somebody who acquired 7 properties in the last 10 years, feels great. There was nothing country music about my life.
It's true.
I want everybody to take the next 10 years and get to at least those kind of 7 properties, because it's never going to feel like it's easy or the right time to buy, but it'll be the right time to own.
Dion's life is like a country song. It's just like one of those peppy ones, not like one of those Merle Haggard ones. or Charlie, what's his name? The devil didn't go down to Georgia. All-nighter hider, play that country music backwards and get all your stuff back. I like that. Matthew Paris, that poor guy Matt and Mike responded to with 7 flips really put my problems into perspective. Yeah, that I feel bad for him. I mean, that's going to be a rough road. Mitchell, I'm excited for the product review. I am too. It's an awesome review. It probably saved me a $10,000 problem. So, and it was $50 or less. If every single landlord doesn't have these in their tool belt, it's a bad thing, because I can tell you that a lot of companies have sold out of these things because every crew that has a truck has them on the truck and they have no problem. I got charged $125 for something that cost $25 that I could buy on Amazon. Matthew Paris, can we get a baby lumberjack update? Yes, about a week and a half. She goes in for new scans November 1st. Eliana is doing very well. Thank you for asking. But yeah, in about a week, we'll have new scans. And so we'll see how that goes. Obviously, believing that we've kept our miracle. Robert Finley, I plan on keeping the hardwood floors. Have you used green glue and 2 sheets of drywall? I've not used green glue. I have used 2 sheets of drywall. Dion, have you done any of that?
I generally would cover in a rental, but I'm all Class C. I do have one where I left the hardwood exposed, and that happens to be the one where the other tenant soundproofed the wall. So I haven't done the dual drywall, but it's probably the solution.
Yeah, it works really well. Carrie, hey guys. Hi, Carrie. Have you guys heard of anyone being under contract on a new construction bill with about 3 months to close and asking for the newly offered builder incentives as they've come out? I haven't, Dion.
I haven't heard of it, but the person with the ability to walk away has the power.
That's right.
Look at your contract, but negotiate for what you can.
Yes. Sean and Wendy, question. Are you moving your call to Saturdays to take the space? Zuber is off. We are moving now. Our church is earlier there. Our church is later. Like we like being live. Yep. So we can ask questions within the feed. Cool. Don't know, still TBD. Dion and I are going to talk about that too, since Mike's just decided to vacation. Although I don't know that you're going to end up with a Saturday if Dion would have his way. I think we're all working less. Robert Philomeli, which code is this that the 2 layers of 5/8 fireproof drywall? Does this apply to bathrooms as well? Code conflict, because don't you need the purple drywall, not the red for bathrooms? It's just 5/8. So you don't actually have to use fireproof 5/8, just 5/8. And so you just layer up. So the thing that people are looking for is a 2-hour burn rating, and it's only where the ceiling is shared with the upper floor. And it's only if you're ripping down what's already existing there. So you don't have to add it. The code, the way I read it, you don't have to add it if you already have a ceiling there. However, if you rip down that ceiling, then you have to bring it to code. Is it in the new version of the International Building Code? I don't know. We went to I think it's 2019 code actually. Chris Miller, I offset my cost for utilities by just charging a flat amount each month. I cover oil, heat, water, trash, sewer. It equates to about $300 a month. I just charge an extra 100 per unit in the duplex. Like it. Yep, absolutely.
Here's a warning.
Please.
So know your local ordinances, and
Yes.
where I invest, you are not allowed to charge a penny for utilities above what the actual bill is.
Yes.
So while that's a thing, what I'm doing is I keep track of the annual expense, because there's a couple properties where the water has to be in the owner's name. They can't charge the tenants, and I charge a flat rate. And I do charge a little bit more, so that in the summer, when there's those 1 or 2 months where it's an exaggerated bill, it balances out to the year to where I don't profit from it. So if I ever end up in court, I think I have a defense. I don't know that it's a solid one, and I don't know that it's how I would do it in your area. So again, not giving advice, saying what we do or what I do. Know your laws on that. You charge an extra $100 per unit. that could be something you have to reimburse with interest.
Yes. Kane Koo, welcome to the channel. Happy to have you. Bought new construction under value in Orlando, Florida. Pretty happy about my purchase. Should have equity by the time it's built. That's awesome. I think that's great. I think that when you're happy about that purchase, again, the key is for you, it fits what you're doing. That's the biggest thing that Dion and Mike and Millennium Mike, that's the biggest thing that we all talk about, which is no one knows your finances like you do. That's why all Dion and I can do is share our stories, because we share the relevant numbers with you. And I think that we just want to put that information out there. That way people can potentially use that and see, yeah, I kind of fit in that ballpark, or I don't fit in that ballpark at all. I'm ecstatic for you that you feel good about your purchase. I think that's great. Robert Fionelli, I know she can't afford without assistance. She is a holdover with no lease, so I can just give her a notice for December 1st for end of lease. Also, because I am in the other unit, it is a unprotected unit. Yeah, I mean, you know, state, local law. So I think that that's the key, is just follow it by the book. I would give her every opportunity to say, this is what it's going to be. Maybe something's changed for her. Maybe it hasn't, but I would do everything that I can to work with the existing tenant. Dion?
Yeah, no, it sounds like knowing your local laws is key there, especially
Yes.
understanding that, especially in places where there is things like rent control, owner occupied small multifamily is usually excluded from that.
Yes.
Especially, the House Act version, right?
Yeah, for sure. David Yang, question. I asked this question before, but not in detail. For LVP that already comes with a pad, do you add pad on top of the pad for upstairs floor to null the noise? Yes, I do. I will, even though it has a pad, I will still put down the soundproofing pad. It actually does make a significant difference. And so that's absolutely what I've done. And again, your other option is, you put that padding down. If you buy it in bulk, it's about 89 cents a square foot. The bigger thing is, what's your installation? If you find out that it's too loud after you've put down your LVP, guess what? You're gonna have to uninstall and reinstall. I always go the safer measure, which is, let's just do the best that we can to create the best end product that we can. I only want to install it once. And the next time I'm going to rip up these floors is probably 15 to 20 years from now. Might not even be me. It's probably going to be my son or my daughter doing it. Chris Miller, I've noticed in my area, rent is dictated by bedroom bathroom count. Yes. Amenities and how well it shows. Yes. I've gotten way higher rent than I anticipated. Dion, you want to speak to that?
Me too.
Yeah, exactly.
We've said it a few times. It really seems like it's a good thing to own rentals. And I'm doing a video probably this afternoon on a binder strategy that a viewer did, where the viewer talked the tenant into less rent. I'll explain it in the video, but it's amazing. And I'm shocked at the amount of rents that we're getting that are too low. Like we're not getting the area average sometimes. And it's like I said, we've had 30 to 40% rent increase in most markets in the last 2 years. 30 to 40% is a lot when you can compare it to 2 years ago. If we looked at 2010 and we said, oh, it's gone up 40%, sure, that's a few percent a year. But in 2 years, I was talking to you off camera about this, and I won't share, but the numbers are astronomical.
Astronomical.
Like, I can't say it clearer. Buy rentals. Buy one rental at a time. Get there.
It's not a bad strategy. I've heard that works somewhere. Robert Fionelli, I'm originally from Mass, Matt. You're welcome. Thanks, Robert. All-nighter hider. Hey, Mike, I held off as long as possible, but finally subbed to your channel. Hider. There's good stuff.
Held off for as long as possible.
Yeah, it's awesome. It's awesome.
Millennial Mike has got some things that we can't speak to. That investing at a distance, using a different market, building a team that you're not interacting with, running properties where you can't just take a 20-minute tour and go over there.
Yeah. Doing a burr in this market. It's all crazy.
Doing two.
Yeah.
In this market. Yeah.
He's insane sometimes. CC Smith, good morning, CC. Good to see you. Thanks for coming and joining us on the channel. Hyder, good advice. Millennial Mike laughing at Hyder. That sounds right. Jeremy Kirkwood. Hey, gents, happy Sunday. We had a seller that had been mulling over selling for 6 months. It has sat in as is condition. Yesterday, he reached out because he couldn't sell, writing a 5% seller finance offer today. Good for you. Good for you. What return does that give you, Jeremy? If you're still here, I'd love to know what return that gives you. Christopher Leroy, I know no one wants carpet nowadays. However, should I or tenants steam clean them and how often? I do them on transition of tenants. Tenants can clean them as often as they'd like, but I'm not paying for steam cleaning their carpets until they move out. And if they were destroyed and it was 2 years, then they're going to get some of the bill. If it's destroyed and it was 10 years, they're getting zero of the bill. That's kind of how I do it. Is if they've been there for 10 years and they destroyed the carpets and the carpets are just, no, they need to be tossed, then that's where, to me, that's a level of wear and tear. Dion, it's 12:50.
You have a hard stop. I took a screenshot of the questions from Sam and Wendy, and I will address that on Tuesday at 4 in my live stream. That'll be my opening question.
That's very nice of you. And Brock Boudreau, good morning, afternoon, gentlemen. Brock, thank you so much for joining us. I know you're new to the channel. Super excited for all you guys to have been here with us. And Dion, thanks so much for coming and hanging out with me. I do have a hard stop today because I've got some very important stuff that we're going to be bringing out this week. And we had to schedule it. It was so professional, a little bit scary. But Dion, where can everybody find you, my friend? Because he will continue this legacy on Tuesday night. Where can everybody find you?
Right here on YouTube, Dion Talk Financial Freedom, where I thank every hater for the penny when they log in just to leave a mean comment.
We really don't mind. At the end of the day, somebody was like, come on, man, your move. I wrote back, I go, I don't care to debate you. You keep on screaming at your television, keep on screaming at your phone, throw your phone against the wall because I got you so tickled that you got upset and you threw it against the wall. Nothing you do affects me. I just don't care. You can believe what you want to believe. I believe what I believe, but I believe what I believe based on experience, knowledge, and actual information. Not just watching somebody else's YouTubes or believing that I am a amateur chart interpreter. So wish you guys all the best. Dion, thanks again for coming and hanging out. Everybody have an absolutely awesome week. Please press that like button before you leave if you haven't already. And if you didn't, leave me a comment on why you didn't. I'd love to know. If you didn't like what you heard today, I'd love to know why. Anyway, appreciate you guys. Have a fantastic week. And I will see you guys on Tuesday on One Rental at a Time. And Dion has his live stream at 7 p.m. Eastern time, 4 p.m. Pacific. Thanks everybody for joining. Have a great, great week.
Ciao.
Done.